What's going on, everybody? Welcome back to another episode here of the Multifamily Hour podcast. Maybe this is going to be like this might be the Multifamily Hour podcast like after dark by the time that we wrap this one up here. But I got Zach Harris on the podcast today, and familiar name for some of you probably. He was on the podcast like 2.5, 3 years ago, something like that. Or if you're just seeing his reels flood your Instagram for you page, if you're in real estate, I'd imagine that's probably happened. But yeah, Zach, here, maybe tell me if this description makes sense and anything I'm missing here. Part-time bodybuilder, part-time Newfoundland owner, part-time shit poster, part-time, maybe full-time real estate investor. Anything I'm missing there in the high level bullet
I think
points?
you've checked most of the boxes, if not all. It's good to see you and actually talk to you again. 2.5, 3 years later.
Yeah, yeah, I know,
I guess
right?
I guess we're still doing the real estate thing, so that's nice.
Yeah, we haven't gone bust. We
Yeah,
haven't washed
yeah,
out like a lot of our contemporaries probably have over the last few years,
correct.
which is nice. A lot of people have come and gone on the interwebs as it relates to real estate investing, but we're still
Very
here,
much
so that's
so.
good.
We'll take it.
Yeah, all right. So let's just quick refresh on your background. How'd you get into real estate?
Sure.
What are you buying now? What's the business look like? All that fun
Yeah.
stuff.
Beyond anything, really appreciate you having me back on. Even though it took a few years, hey, it's good.
Yeah. I didn't have the white monster to crack.
That's
Cracking it underneath the microphone is kind of crazy. Yeah, look
uh,
for the white monsters downstairs. Didn't have them. We're gonna have a
it's
sun
all
cruiser
right.
on this episode.
That's all right.
But anyways, continue.
So no, no, no. Really kicking in college. I worked an internship at a rent to own, lease to own company. That's kind of where I got my, cut my teeth, if you will, and quickly realized, okay, hey, this probably rent to own situation isn't really what I want to go do. So I was living in Florida at the time, go to school, picked up a real estate license, figured, hey, I'll go sell, $1 million houses on the beach. Turns out a 19, 20-year-old kid probably isn't going to be selling, $3, $4 million houses down in Southwest Florida. So fell into doing leasing to like buddies, right, on campus, was doing fraternities, sororities, and started to recognize, okay, hey, some of these owners that I'm leasing for a couple $100 a month, I'm getting a little commission, but man, I need to be on the other side of this, right? And so at the time, I recognized, hey, I don't have two, three, 400 grand to go buy a house down here in Florida. Decided to move back home to Indiana, where I'm like Indianapolis, where I'm born and raised. Figured, hey, I can go pick up a 20, $30,000 house. So that's what I did. Moved back home, finished school in Indianapolis, got my real estate license there, picked up my first house, 20, 30 grand. And that's where it all started. And then
How
started
many years ago?
brokering.
How many years
This
ago was
was
that?
20, this was 2018.
Got it.
So, pre-COVID, bull run that we went on. So still able to, again, it's all relative, but pick up a house cheap, did the renovations myself, the whole nine, brokering houses at the same time, excuse me, and then recognize, okay, hey, there might be onto something here if I can go pick up a house for 20 or 30 grand, rent it out for six, seven, $800. And that's where the snowball began.
Got it. And I mean, that snowball has rolled and grown and rolled and
Yeah.
grown. So, I
Yep. Very
think,
much so.
well, post 2018, I mean, high level like context, at least, obviously from where I'm
Yep.
sitting, right? It's like a lot of small deals of like
Yep.
these portfolios, a lot of direct to seller. You got into
Very much
storage
so.
at one point in the last handful of years
Yeah.
as well.
Yep.
Like today, in terms of like what you're buying and what you're looking for, like what's the kind of overall like we look for these types of deals in these
Yep.
types of areas?
So you hit on direct to seller, very heavy on direct to seller. I'm doing 20,000 mailers a month, give or take. Most of that goes to single family homes. And what we do with that is we use the single family homes for wholesaling and flipping. And that liquidity that I'm able to take from the wholesaling and flipping business, I then go create a war chest of cash to go throw down on my small multis, portfolios of single family rentals and then the storage. To date, we don't have outside equity in these deals, right? If I need cash, I'll go and raise some private money, but that's how that's structured today. So I have a storage company, Midwest Storage. We have 11 sites between Indiana and Kentucky, all vertically integrated for the management side of things. And then we have, gosh, I want to say about 140 residential units. So that comprises of single family homes as well as some small apartments. We've got, fourplexes, eightplexes, 14, a 16, those type size deals. And we found those to just be, pretty prosperous for us in terms of A, going direct to seller, but B, just the management. We have third party on our residential portfolio, but we are very dense in one particular market and we've found success with it. So it's myself and a buddy that I met from college. We started flipping houses together, and that's what it's grown into today.
Yep, that makes sense. And then you personally, you're in Austin now, right?
Yes. Yep. Yep.
So like high level, I mean, like being vertically integrated, like is your buddy slash partner back like in that area, kind of running that side of it, or
Yeah, so
yeah,
like we definitely have the, A and B personality type, if you will, right? I'm very acquisitions, finance side of things. He runs more of the back end operation, if you will, right? We have a few employees in the storage business. So if you will, like managing all the chaos and the site, the day to day on the sites and some of our remote guys, that's what he oversees. But yes, he's in Indiana. He's not on site very often, right? A lot of
hmm,
these self storage facilities are, you're talking like 10 to 12,000 square feet, so small.
yeah,
But a lot of the vendors and stuff like that, there's some string pulling, if you will, that he oversees the bulk of that.
got it.
Yeah,
So high level here, just in terms of like what I'm hoping that we're going to do in this whole
sure.
conversation here, because I think there's a couple of things. Like one, we'll probably get into like some of the stuff that's applicable to everyone, like direct to seller, maybe
Yeah,
structuring
yeah,
deals and seller financing, stuff like that. But I figured we would play off of your newfound Instagram fame from some of your lovely reels here, showing off those
yeah.
biceps and your sense of
I
humor.
really appreciate that.
And so I picked out a few here that like I think
Okay.
are like general. Like I'm just gonna share kind of like general topic, and then we'll just elaborate
Yeah.
on them. We can talk
Okay.
about them because I think that'll
For
be a
sure.
fun way to like touch on some subjects that are actually
For
applicable
sure.
to everyone.
Okay.
All right, starting here. Like just buying rentals isn't like that's not going to get you anywhere. And then I think you described it as like drinking the rental Kool-Aid of
Yes.
a couple hundred
Yes.
bucks a month on a house here and there.
Correct.
You and your words say that doesn't really change much. Like elaborate on that whole concept.
Yeah, I appreciate you doing this too because, I'm sure there's a lot of folks out there that see this, minute 30 bit and we're like, wow, this guy is kind of a jackass, right? So it's nice to be
Yeah.
able to, have
We're
some,
gonna marry the
we're gonna have
jackass
some,
humor with the underlying like I mean, you're a smart guy, and we're gonna get into that.
I appreciate that. So yeah, it seems, especially, I hate to sound like this guy, but we've met each other what in 2020,
2020, I think, or one
right?
or something. It was like shortly
Yeah.
after COVID. Like,
So
yeah,
looking back on the last 6 years, right? I think that there has been we've had some products of like we were in a way a product of a low interest rate environment, right?
yeah,
And so for us going in and having low basis on some of these deals and the quote unquote cash flow starts to become very strong as we've migrated into a new interest rate environment, just a new economic environment, that whole narrative has changed, right? Changed very much so. And I think that the story that was getting pitched where hey 2020, 2021, 2022, hey you can just go lever up on these things, like just go get rentals, you're going to have appreciation. That it's just been very different. We've experienced a polar opposite today. And so my point with all that is like, hey, just buying rentals for a lot of people doesn't necessarily achieve that, quote unquote, like retirement and or wealth play, right? I don't think it's a bad thing to go get some equity in these types of deals, whether that be single family, small multifamily. But at the end of the day, you have a real business, right? You're operating an asset that is going to require repairs and maintenance. It's going to require capital expenditures. And I don't think that some folks who haven't operated real estate for years on them like that recognize, the kind of money that goes into that.
100%. Yeah, and I think it's like there's a common phrase of like cash flow is like a defensive metric, or the way I've said it is like cash flow like keeps you in the game, but it doesn't really. It's not really what's
Yeah,
buying you your next deal, right? You're not taking all the cash
correct.
flow from this deal and rolling it into the next deal. That's not really, that's a long-term multi-year time horizon in order for that
Correct.
to occur. And what's more likely than not, especially for a lot of the folks who listen to this podcast, right? It's a bunch of, guys and gals buying B class, C class rentals where
Yeah,
you stretch that time horizon long enough and like the cash flow is fairly non-existent unless you're literally
correct.
never
Correct.
refinancing and 10 years
Correct.
later your interest payments are low and your rents have gone up or whatever, but like that's not really how anybody's running their business.
No,
They're going to keep refinancing, they're going to keep reinvesting that cash elsewhere, and that's fundamentally what we're doing all of this for, is
correct.
like buying the deal, creating the value, selling or refinancing,
Yeah,
pulling
you're
the chunk
you're
out.
pulling the levers and moving the equity around, right? Unless you're in a position where you're just extremely flush with cash and you're going and buying these, A class assets with little to no leverage, Okay, different story. But most of probably your listeners, yourself, myself, that's not the position that we're in, right? We're either
No.
creative finance, we're relatively, levered with some of these properties. So those first couple of years, yeah, the quote unquote cash flow is non-existent. And so if you're not going in and having a value add play or there's a strong basis, right? Yeah, like I said, that's where the cash flow ain't it, right? You
Yeah.
look at the position that I'm in. That's why I still have the house flipping wholesaling business. Yourself from the third party side of things, you're doing management to collect fees because for some of these folks, they're like, hey, I'm just going to go buy, a handful of houses or a couple of small apartments and then just retire. I think they quickly, as they do the math, they quickly realize the amount of invested equity that you have to generate even 10,000 a month, 20,000 a month, $100,000 a month, depending upon the markets that you're investing in. If you're not going in and absolutely, quote unquote, stealing these things, you're talking millions of dollars in invested equity to go generate 10, 15, 20 grand a month,
Yeah, 100%. And the thing that is
right?
like, especially for, like somebody like me, just because I personally live in the city of Boston and I know a bunch of guys who buy real estate in Boston, like
Hmm.
an extremely, extremely high priced market with extremely high
Yes.
rents.
Yes.
Like, if you're the young guy in the greater Boston area who's going to go, like, there's no opportunity to even find cash flow, right? And,
No,
and even if you did, right, let's say you go 30 minutes outside the city and you buy a property for 300,000, a door, and it rents for 2,200, 2,500 bucks a unit, and you've
sure.
got like some small nominal cash flow. At the end of the day, like that cash flow is not, again, we're not optimizing for that. You want to earn as much equity because at any point in time you can convert all of your equity in all of these buildings into cash
Yes.
flow if you so choose
Correct.
to do so.
Correct.
You can sell all that in 1031 into a high
Hmm.
cash flow asset. But
Yes.
like you have to do the equity thing first in order to get to that point.
But even on the other side of that, right? Take a market, some of the markets that I go and play in, right? Let's say you go pick up a property for, you know, a $500,000 that's doing, $6,500, $7,000 a month. Yeah, that's much different than a product than you might find in Boston per se, right?
Yeah.
But you're still in those first couple years, if you're not accounting for the CapEx reserves and things like that, and you go have a major event, all that's technically wiped out, right? Especially if you're levered.
Oh
So
yeah.
if you can go get that $500,000 deal or $500,000 valuation at say three and some change, and you have a swing of equity there, hey, great, right? But until you can go have that capital event and exchange that equity, like you said, it's not non-existent, but it's tough to really rely on that.
Yeah, I mean, all it's doing is it's paying for like the little shit that you should be reinvesting back into your business. Like it pays for
Correct.
another round of direct mail. It pays
Hmm.
for your CRM subscription. It pays
Yes.
for like,
Yes.
your part-time VA or whatever. Like that's really what in the grand scheme it does. And that's how you should be thinking about it versus trying to cling to that cash flow, build it to go throw into the next deal. It's like
Well,
that's
and,
not really
and
the roadmap. Yeah.
furthermore, right, and I don't know how many of your listeners are, pooling money together, potentially syndicating. It gets, I think for me, I've seen even on a small level how slim some of the margins can get, even with having good basis, right, on these
Yep.
deals. As you go bigger and trade up, it's difficult, right? If you've got preferred returns that you're having to pay and some of these different metrics that you're having to meet, I think you quickly realize, oh wow, like you really have to be a strong operator.
Yeah. Yeah. I mean, if again, I'm going to make a very generalized statement that somebody was like, I'm sure somebody's going to say, no, that's not, whatever, that's not the case. But like, if you're buying real estate in the vast majority of markets throughout the country, like outside of, really tertiary markets and maybe like the
Sure.
Midwest or some of these more rural areas, like, and you're buying that deal with an eight pref and you're paying, call it market for like a seven, eight cap, nine cap deal, and you have an eight pref, like, you're really not going to make much money as a sponsor in that deal if you're
Correct.
syndicating it because unless the market gives you a whole bunch of tailwinds, there's not really a roadmap into exceeding your pref and getting into your promote. So the vast
Yes.
majority of the deals that
Yes.
we're buying, if we're syndicated, if we're syndicating them, assuming we have an 8% preferred return, you got to buy it at that 5, 6 cap. You got to get it to an 8, 9 stabilized cap rate, trigger a capital event. And it's still how
Hmm.
you get paid if you're syndicating the deal,
Correct.
right?
Correct.
Outside of, fees, which is a whole nother conversation.
Sure.
All right,
No, I
rule
couldn't
number
agree more.
two.
Couldn't
Yeah.
agree more. Okay. On to the next. These are good. This is good.
This is good. This is good. So far, so good. All right, here we go. We're going to dive right back into the deep end. AI can't fix your dog shit personality. And I think you mentioned this sweet Claude integration isn't going to solve the fact that you're of that you suck on the phone or what have you,
Sure,
right?
sure.
That whole concept. Let's
Yeah.
elaborate on that.
Like living in Austin, that's the topic of discussion, as you walk by somebody, you're like, oh, what kind of AI bot do you have going? I know you guys do a ton of direct seller.
Yep.
That's how you've, cultivated some of the relationships and, strong deals that you've been able to perform on. I'm in the same boat there, right? And I think regardless of the market that you're in, the point of all that is like at the end of the day, if you're not a decent human being to interact with, right? It doesn't matter how much AI and all, the infrastructure that you have to lean on, it's going to make it more difficult, I think, to try to grow and then have those connections with people, right? Not only from a direct to seller side of things, brokers, lenders, management companies, the whole nine. If you aren't somebody that's like, oh, that guy's like a pleasure to work with, he does what he says he's going to do. Yeah, I'm all for having some technology and being able to lean into that. But man, like in these last, we talk about these last 6 years of doing business with people, it's like, man, I really don't care how much AI or what kind of infrastructure you have on the backside of things. You're just not a great human being that I'd want to go do business with, right?
Yeah.
Like, and a lot of these are like kind of, I'm not attacking anyone specifically, but some jabs that I see it, you know, in general with folks, it's like if you see somebody like the real estate space specifically really isn't as you get more plugged in with folks, it's not that big of a
No.
industry, right? And so if you start, kind of screwing people over or doing, some not so great things, word travels pretty fast, right? And it's like, oh yeah, no, that guy, like, he's kind of a sleazeball.
Yeah. Yeah, exactly.
Right? So yeah, that's what it is.
Yeah, I mean, and I'll share my interpretation like of that concept, right, which is
Sure,
similar, and it's like fundamentally speaking, like technology should not be replacing like the human to human part of the whole business, right?
sure,
Like,
sure.
I remember we at the end of the day, like, and this is a bit of a sidetrack, but like, and I'm sure you would agree, like sellers, when we're reaching out to sellers trying to buy their buildings, sellers just want to sell the property to the people that they just like, that they
Absolutely.
enjoy talking to. Like,
Wholeheartedly.
it's an obvious concept, but I think it's oftentimes lost on people. And like technology is
Yes.
one piece of that. Another piece of that is like you're calling up the blue collar seller and you're acting like the, stick up
BlackRock.
your ass, like,
What are we
analyst for
doing?
the large company
Yes.
talking about fucking cap rates and shit. Like that's,
Yes.
you're okay. You're not even, you never even had a chance at that one because the guy's going to go
Correct.
sell to the guy who's like, wants to learn about how he turned the units and showed up in a
Yep.
t-shirt to the
Yes.
walkthrough and not a suit and all that.
Yes.
And like there was a whole deal that we won a couple of years ago. I don't even want to be specific because I might there might be like names that come out of this, but like we won a deal for like a really large deal that was direct to seller, and it
Okay.
almost boiled down to like we showed up there in like jeans and t-shirts, and we talked to me and my acquisitions manager like talked to the owner about like all the work that he personally did, and like I talked to him about the plow that he had in his truck for 25 minutes, and that was the most interesting
Sure.
thing in the world to him. And we were competing with two other guys who showed up in suits and ties, and we know that because that's the type of people they are, and
Sure.
they didn't get the deal. And I think
100%.
the version of that is relevant to this particular comment is like AI technology is not that doesn't replace human interaction.
Correct.
The last comment I'll make on this too is I saw a big sponsor on LinkedIn who does a bunch of big deals, like really excited to release an announcement that they had developed like a chatbot to like you can type in messages to this chatbot if you're a prospective passive investor in one of their like
Sure.
syndicated offerings,
Sure.
and it answers your questions about the deal. It's like what's this underwriting metric, and what's the business plan, and you would talk to the bot and it would give you answers about the deal. And I saw that, and in my mind all I could think of is like, why would you ever want to replace what's probably the most valuable interaction you're going to have in your business, which is talking to like your LPs with a chatbot. I'm like,
Yeah.
that's just like, all right, that's
Yeah.
maybe if you're operating at some absurd scale, but like that's an example of me shaking my head going, that doesn't seem like it makes any sense.
It's interesting you mentioned the chat bot. This is weird that you just brought this up. This has been a few weeks ago, and God love them, but like our storage, the software that we use,
Hmm.
they're, hey, we get all these different AI integrations, and that's great. I operate in a lot of second, third tier, very tertiary markets to where, hey, I need a unit, right? Hey, we have this chat bot that we can install on your website. And it's like, hey, like most of my folks that are, tenants or prospective tenants, it's the same thing. It's like, hey, they're going to call you up. Like, I, that's all good and well that we can do the integration on this chatbot, but like no value to me. I'm not
Yeah.
operating at the scale of a public storage and extra space, any of that kind of stuff.
Yep.
So again, I think in an age of where people are really leaning into the AI stuff, and I love it. I really do. There's certain aspects of the business where we 100% use that. But to your point, it all boils back down to like, okay, is the person that's running this thing, like I said, a halfway decent person that you'd want to go and do business with? And furthermore, I think people see me post about buying all these like really cheap properties and so on and so forth. A lot of times I'm not going in just like lowballing the heck out of these people. It's more so, hey, people are coming in saying, hey, we know that you bought so and so's property down the street, or you bought my brother's or cousins or whoever. Here's the price I want. Like, are you willing to do that? We just know that you guys perform good business, good people.
Yeah, 100%. All right. Another spicy one here.
So we got,
Good morning to everybody except the 70 dudes who partnered on a fourplex. And I think the thesis statement of that very eloquently phrased sentence is like, why are we like there, we
yeah,
shouldn't be excited to go buy a small deal with a
yeah.
million people. Like, talk about your thoughts on that.
So again, taking it back to 2020, 2021, I'm sure maybe you felt this way. I know I did for a few years, being like the small guy in the room, if you will, right? I'm going after
Oh
these
yeah.
duplexes, eightplexes, like I could probably back then hardly describe what AUM was, right? You don't know what you don't know. But over time, I started to recognize that some of these, smaller deals that I was buying individually or with just one other partner, there was a substantial swing in the equity. There's substantial, margin there. And as the, multifamily space started to heat up a little bit more, I started seeing more and more people partnering and, the check size is getting smaller and more investors starting to, get their hand in the ownership of that stuff. And I didn't, even from the get-go, I didn't really understand all that because we just talked about, hey, there's not a lot of cash flow that's getting peeled off of these things, but B, even in some of these deals where it's not a 300 unit deal, why do you have six partners on a fourplex? Why, right?
Yeah.
And I'm all for making it happen if it's your first deal or something like that. I don't want to put discourage anybody or put anybody down, but I think it became a really hot topic of like, oh well, I've got X amount of units, I got X amount of doors, I got X amount of AUM. And while there's, some of that is warranted and trying to, start a conversation as an operator or somebody that like has done this for a few years, you quickly pick up on like, oh, this person is a full space cadet, right?
Yeah.
So yeah, I think that like I have more respect for the guy. It's like, yeah, man, been kind of buying one or two of these a year, and I'm doing it on my own, and like that guy, you can speak very candidly with, right? Versus someone who's like, yeah, I got to, consult with my partners. It's like, hey, man, it's a fourplex. Like, what are we doing here, right?
Yeah,
So,
yeah, exactly. Like, and I mean, like, we always talking on this podcast about like how do you get that first one done? How do you get off the ground,
yep,
whatever.
yep,
And then that conversation then leads to like how do you start raising money? How do you get, your first few investors in if you want to scale your business and like buy more deals? And I'm always saying like one, you should never be taking investor capital until you've done a few deals yourself. So let's rewind. Let's go do a few deals ourselves
yep,
here.
yep,
And there's nothing wrong with buying a 3 unit building, in our market in New Hampshire, that's going to run you 700 grand.
sure,
Buying a 3 unit building for 700 grand with like two people, right? And you get in there, you get your hands dirty.
yep. Cut your teeth.
The dollars actually work for you in that sense too, because
Mm-hmm.
you're not going to make any money when you're raising money on these small deals and you got to give up a lot of the deal to get the people
Correct.
interested in investing in the deal. And then the stakes are higher because you're making mistakes with other people's money. And then
Yes.
it's like, let's just put all that aside. That's just not the roadmap forward, in my
Yep.
opinion.
Yep.
But at the same time, like, you don't want to continue, like, at the same token, it also doesn't make sense to, in my opinion, ride shotgun, because I think this is the other path that people follow to get to a position where they feel comfortable raising money, where you have your 2% of some general partnership because you brought your brother's 50K investment and you
Sure.
invested 50K in a $4 million raise,
Mm-hmm.
and somehow you get to say that you're the owner of this 100 unit building or whatever. That doesn't teach you nearly as much
You're
as doing
100%
those small
right.
deals. Yeah.
I'll give you a perfect example. When I was like coming up, this is before you and I met. I was going to a lot of these, multifamily meetups, conferences, the whole thing. And I had in my mind I was going to go out and syndicate a 150 unit building. I had zero business doing that, right? I had
Yeah.
30 or 40 grand saved up, and I kept getting to this point where I'm like traveling to go walk these properties with brokers that I don't even have enough money to put the EMD up, right?
Hmm.
And I fell into this for a year and a half, 2 years before I realized like, hey, I just need to go like take the duplex down, take the 10 unit down, cut my teeth, right? If I got to go do it on my own, I got to get hard money. I got to go do it with one other partner versus, you know what I'm saying? But I think
Yeah.
initially when you're new, when you're green to it, the wool does get pulled over your eyes a little bit of like, hey, you just go big. And it's like
Well, luckily
I found
the guru culture has, I think that perpetuated that, five,
for
6 years
sure,
ago when the
for
market was
sure.
humming. And the one good thing about the market slowing down considerably is like the vast majority of those groups slash people that were like heavily pushing that thought process around how to get into the business have kind of like washed out, and
Yeah,
it's
I would
like I'm
agree.
sure
Yeah,
we could both name a dozen people that come to
sure.
my mind as they're like, they're the first to say I own 500 doors. They raised like $1 million across a few deals, so they
Hmm.
own 500 doors. And now they're just no
Hmm.
longer even really in the business, right? It's
They're not
like,
even real. They're fully like I know
yeah, they're just
a
out of it.
couple again,
Yeah,
not gonna say it, but fully just back to a W-2. And it's like, well, I thought you were like Joe Realtor guy, Joe Real
yeah,
Estate guy. What
yeah,
what happened?
exactly. Yeah, and it's interesting living in Boston too because like I'll meet a guy at like I'll go to like a broker event or whatever,
Okay.
a couple of free beers and some free food, and you'll just meet a guy who's like, yeah, I own like 30 units in Boston or whatever, and it's like some guy who's in his like 40s or 50s, but like they're paid off, and
He's a player. He's
yeah,
a he's
those
a
30
he's
units
like an
are worth
actual
those 30
player.
units are worth $20 million,
Hmm.
and he's got,
No debt. Yeah.
25% LTV on them,
Yep.
and he's paying them off.
Yep.
And it's like that's actually a more profitable roadmap than the guy who's trying to wedge themselves into larger deals as a smaller equity owner trying to raise money or to try to go about it in that
But
capacity.
I'll say this too. That guy that you just described, his decisions weren't being driven by ego.
That is exactly. That's
It was
also
just
true.
purely, hey, this is a tried and true way. I'm gonna go do it. And maybe it takes 20 years, but
Yeah,
you know,
100%. Alrighty, on to the next one here.
all right.
This was a recent one you put up. The hook on it. Direct to seller deals aren't that difficult. You just need three things. Let's talk about the three things
Okay.
that you need and
Sure.
why it's fundamentally not that difficult to start at least trying to,
Sure.
get deals done direct to seller.
I mean, I've been doing direct, like I started as a broker. And so that's kind of how not that there's any secret sauce to being a broker. I know that that's kind of where you got some of your start as well, but it kind of goes back to our initial conversations, like being a decent human being before anything, but
Yeah.
then, getting in front of those people at scale, right? And so for me, when I started doing direct to owner, it was a lot of cold calling, and I recognized, okay, hey, I can't like as much as I'd want to sit here for hours on end and cold call. It's just not you can't, that's just not what I
Yeah,
wanted
you're
to
just
do.
gonna run out
So
of gas. Yeah.
correct. So again, still can do it very targeted, but I started basically, trial and error with mail in 2020. We were doing on a lot of houses, started doing apartment deals, and just had no idea what was going on. Like I see like maybe a YouTube video or something about direct mail, had no infrastructure whatsoever on doing a mail campaign, right? So I go find a mail house of here's who I want to go and potentially use. I go find a list. There's a couple of these different softwares that you can use though, right? Like a PropStream, Reonomy. We're big on PropStream. It's where we pull a lot of our lists. Like you can go in there, filter, hey, 2 to 4 units in whatever county, whatever city. And then, you go get your mailing house, you figure out who you want to blast those out to, what you want to say on the mailer, and then you go and do it. Well, in 2020, I had my cell phone hooked up on that first round of postcards, and I sent out, 10,000 of them. I didn't realize how, big of a shit show that created for me. You literally have for a week straight, people just hammering you. You have no way to figure out, okay, what address is this associated with? You get off the phone, you get another call coming in while you're on one, and it was just absolute chaos. And so as I did more and more mail over the years, I started to realize, okay, I need to have like a system, a process to where I can do this at scale and have a way to be able to track it. And so the point of that reel was like, hey, you don't need to overcomplicate the direct to seller process, but figure out, hey, first and foremost, go get a CRM, go get a place where you can house all these leads, where you can track them, because you sure as hell can't do it on a cell phone and a pen and pad at scale. Go get a list, right? Whether that's 2 to 4, whether that's 10 plus units, however long, right? We do a lot of like owned for maybe 10 plus years, right? To where you would catch owners who they have equity, maybe they own it free and clear, and they're just, they ran their cycle with it. And then lastly, it's like, hey, figure out what you want to put on the mailer and get a mail house that can send it out. Like that infrastructure right there, I would say for like maybe somebody who isn't familiar with like doing PPC or wants to go out and hire a team of cold callers or has doesn't have the bandwidth to do, a lot of targeted calling themselves. I think that's a good way for people to get started. That's relatively low risk and low cost, depending upon how much mail you actually send. Because I know you guys do some mail as well, right?
We do, yeah. We don't
Yeah,
send nearly as much as you do because we're just kind of like purely multifamily in a
sure,
smaller
sure.
geographic area. But like we send mail, we send like a routine mailer quarterly and we like
Okay,
adjust. We have 4 templates we send each quarter throughout
okay,
the year. And then on a bi-monthly basis, we send mail to like a very kind of tightly filtered list. That's like
okay,
the 10 plus year owners and the counties that we really want to be in that are 10
sure.
plus units in size. And that's like a small list. It's like 250, 300 records on that
And,
list.
and
And
you
then,
can't hit those people every month, right? Like it's a
no,
different conversation with like a, hey, I want to buy your house versus, hey, like I recognize you have a multifamily. It's just a different avatar.
yeah, exactly. So like our biggest list is like it's not big. It's like 1,250 records. Or I mean, it's 1,250
Interesting. Okay.
individual owners, I should say.
Okay.
So it's like not that big. So like when we send mail, like we are objectively sending too much mail. But for us, it's like okay, we spend 1,500 bucks, 1,750 every
Hmm.
quarter to send these letters, and it's
Yep.
like every time we get a deal, it pays for the next 8 years of mail. Like because the prices are high. So for us, it's like we just bought a how big was the deal? We just bought a $3,050,000 deal from a mail piece,
Okay.
and it's like like our acquisition fee on that because it's part of our fund and all of that. Like our acquisition fee was 60 grand on that, and that's something
Yep.
that's gonna all right, we've paid for mail forever, and that's like not even
The
the
mail,
fee,
yeah.
that's the
I
acquisition fee.
mean,
Yeah.
like I track the ROAS on just like the fees that we take from, just the wholesaling and the flipping. But, if you go calculate in like the equity that you have in some of these deals that you then hold on to, like last, maybe it was actually Monday, I bought a package of 6 houses,
Hmm.
seller finance, 3.5% interest, 20 years fixed. I got,
Like, yeah,
like,
yeah, of course.
oh,
There's no analysis that
I
can
didn't
be
make
done
it.
here. Yeah.
I didn't
It's like
make
a
a
forced.
$25,000 fee on it, but there, like the value and the debt there, you know what I'm saying? So it's like, how do you then calculate that in your, right? Ultimately you're creating this deal funnel, right? To where the wider the net that you cast, the more that you'll potentially catch. So I'm a big proponent on mail. I think it's
Hmm.
good, whether it's single family, whether it's multifamily, but then just being able to stay in front of those sellers, and then having something that doesn't have to be this intricate, system process, but having something to where it's dumbed down enough to where you can manage it, potentially you and somebody else, because it's just like it's an easier way to continually stay in front of people that we've had a lot of success with.
Yep, for sure. All right, next one here.
Okay.
A fun video where you had a live call with a seller who was asking 35 grand and you offered him
Okay.
500 bucks for his property. And I
Okay.
think the question there is like how are you so comfortable? A lot of people aren't
Yeah.
comfortable making an offer like that. A lot of
Yeah.
people, the
Yep.
idea of getting into a confrontation like that over the phone with a seller is very intimidating. What's your
Yeah.
like thought process around all that?
I think so, like with all the guys in our office, like they probably get annoyed with it, but I'm like, hey, run to the confrontation. Just address the elephant in the room. There's a way to do that respectfully, right? There's a way to do that tactically. I think, again, to my point earlier, a lot of folks see the content that I post or the deals that we're doing, like, man, this guy's just like lowballing the hell out of people. It's just not the case, right? But it's
Yeah.
it's approaching those conversations with conviction and being able to articulate that in a way that is respectful, right? Hey, listen, with all due respect, I know you're asking for X. Here's where I'm at and why, right? X, Y, and Z reasons. And some people are receptive to that. They're like, hey, totally understand it. Other people are like, hey, go after yourself and lose my number. But I found that, again, going back to being a decent human, just approaching the conversation with conviction and just saying, hey, like this is where we're at. I'm not here to try to, drag you around. Obviously, I'm sending you mail or I'm making a contact with you, not to waste your time, not to waste mine, but this is where we would need to be, in order for it to make sense. And if you're willing to do that, hey, great, totally understand. If not, and that's how we leave the conversation.
Love it.
So
Next one, because I have nothing to add to that, and I think that's the perfect way to think about it. It's just, yeah, you need to, at some point, you're going to have to address the elephant in the room. You might as well do it respectfully and quickly.
yeah,
And
people are gonna either get emotional or they won't. One of the next.
yeah, exactly. The three Ds of distress.
There we
Let's talk
go.
about
Now we're
those.
getting into it.
Yeah.
Death, death, divorce, and drama, right? I beat those into the heads of my guys. And I think where green, newish type folks get caught up is talking to the wrong type of seller, right? If you have, because I'm sure you maybe get cold calls or mail on
Oh,
your
yeah.
properties, right? You're 29, 30, you're a
I'm
young guy.
31. I mean, I'm
Good Lord.
shit. Good God.
You're a young guy. You're building your business. You're actively acquiring new stuff. You're not a avatar seller or the type of seller that maybe a young guy or gal is going after, to where you're
Yep.
going to get really advantageous seller finance terms, where you can go potentially have this quick exit, or where you're in a lot of distress. It's just not the case, right? When I talk about the three Ds, right? Death, divorce, trauma, like death is, as folks are getting older and there's no plan to hand it off to the kids. The kids don't want it. Maybe there's some bad health that's involved. There is a heightened level of motivation there where those people are more inclined to want to transact, right? The divorce, pretty self-explanatory, right? We run into a lot of that stuff on the residential side, but it still can happen on the multifamily commercial side of things,
With
right?
partners instead of a spouse.
A
Yeah.
hundred
Same,
percent,
same
100%.
concept.
Hey, this guy's taking money, da 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 da. Back to the heightened level of motivation. There's a higher level for them to want to transact. And then drama, right? It's just your general, like, people get emotional about real estate, right? And so we found some real opportunities to where when we interact with those people, those are the exploratory calls or the open-ended questions that we're asking sellers from the get-go to determine whether or not that's somebody that we want to spend, time with pursuing, and then, doing due diligence on whether or not it's an opportunity for us to swing at. Getting the ability to identify those quicker, right? In those first couple minutes when you're talking to somebody is going to save you a hell of a lot of time over the course of your career. Because if you're spending time with the couple that just bought this thing in, 2023, and they don't have a lot of equity, and they're current on payments, there's not a lot of, like, you're just kind of chasing your tail. That's not the right type of person to be talking to. So I always
Yep.
hit on the three Ds, to where go spend your time with people. It's not to take advantage of it, but there is opportunity there, right? Where you need to be able to create a solution for those folks and cater it to what their problem is.
100%. Yeah. And I'll add a couple thoughts and maybe spark some more thoughts on your end. But like, I always, we always say, myself and my acquisitions guy, like, we're never gonna convince somebody to be a seller. We're never gonna convince someone to sell their property. Our job is
Wholeheartedly.
to be present when they convince themselves, when the pain
Yes,
exceeds the threshold
very much
of,
so.
that action threshold of, well, I think I do have to sell this for whatever reason.
Yes.
That's where we want to be. We just want to be the first person they call. And the second piece of it is, and I think this is something that trips up a lot of both new and experienced investors, is there's this perception that a pain that a seller may be dealing with is less so than it actually could be for them. So, for example,
Hmm.
um, like, let's say that we're talking with a seller whose property management company is just doing a shit job, right?
Yep.
They're not collecting as much rent as they can. They're overbilling on maintenance, and they just have a bad relationship with their PM company, which is like a very frequent scenario we're in.
Yes.
In our minds, as competent investors, we're like, all right, well, just go get a new management company, right? That doesn't feel like the biggest
Yes.
motivator of distress
Yep.
until you find
Yep.
out that this seller hired his brother-in-law to manage the property, and that is a
Yep.
relationship he will never end. So he's
It's
gonna,
drama.
the only way out of that is selling it.
Yep. Yep.
Or, this tenant isn't paying rent, and in our minds we're like, well, whatever, we just, we non-renew
Go
their
through there.
lease, we get
Yep.
a new
Yep.
tenant. But
Yep.
they're like, they can't conceive of having to deal with that
Yes.
situation. So that, in our
Hmm.
mind, isn't that big of a motivating factor for us. But for a seller, it can be a completely different level of
Very much
motivating
so.
event, which is hard for a lot of the experienced folks who start going direct to seller to kind of wrap their minds around. A lot of it is like, well, why would anybody sell their property direct to seller when you can get more money if you list it? And it's because you don't have the same motivation tied to these particular events that the
Correct.
seller might. And you have to
Correct.
put yourself in their shoes.
The second that you find yourself holding a gun to someone's head or getting frustration, in the communication and the interaction that they're not wanting to sell to you is the second that you need to take a step back and be like, okay, like what's my end goal here, right? Because then you're coming from a place that's not solution oriented.
100%. Yeah.
Like I see newer people, oh man, I get so, especially like the realtors that are trying to go out and like buy some, their first property or they're somewhat green. I don't know why this guy doesn't want to sell. Well, it's just not the right time.
Yeah. This
There,
isn't
there
this
is,
isn't the
there has
Wolf of Wall
been,
Street where you're convincing the guy to buy the stock. Like we're not
yeah,
gonna
I mean,
that's not
it's
gonna happen.
correct,
Yeah.
correct. Because again, you're cultivating this relationship. If you approach it with, I mean, like years, right? Of, okay, hey, you're towing, I was telling guys this is like, you are essentially towing the line of you want to be consistent with your follow-up without being annoying.
Yeah.
So that, like you said earlier, when those folks do make the decision that they want to sell, you're top of mind.
Absolutely. All right, last reel that I want to talk about, and then
Okay.
we'll close out on a kind of a
Okay.
deal-oriented question.
Okay.
Just a general one. You did a video where it was a kind of a dear 21-year-old self, and then you ran
Yeah.
through all of the things that you would have
Yeah.
done. Let's run
Yeah.
through those. Yeah.
I I like have made a lot of these, not this specific one, but so
I was
many.
gonna
So
say
some of it
you
kind of
might it might be
jogs
even different than what was on there, which is
jogs my
fine. But
memory a
yeah,
little bit. But I think taking some of the experience that I had with starting in the residential broker space, going through, some of the brain damage that I incurred, talking to that younger self, right, as if I were able to go back. And, if somebody is in my mind, newer, they don't have a lot of cash. I think we were all there at one point in time, at least for me. I didn't come from like somebody that had millions and millions of dollars. So it's like, hey, as you're exiting college, no one's telling you to how to go out and basically be a deal maker, how to move and shake. And that was the point of that. It was like, hey, you need to go out, you need to go get your license, go get into a commercial shop where you can go sling some assets. You can go make a ton of commission money, go save that commission money, right? Don't get distracted with the watches and the cars and the BS, right? And then start going out and buying your deals, right? Whether that's multifamily, whether those are businesses. And then furthermore, don't go buy those with, 50 partners, right?
yeah,
You take the confidence and the reps that you had from selling and brokering those assets to be able to go do those on your own with your own money. And that's just like something that I think I've done to a certain extent. There's probably ways that I could have been more efficient. But yeah, that was the whole reason for that. I was like, I think there's so much noise out there, right? Of the multifamily, this or that, or, should I be a broker? Should I be should I go syndicate? And it's like, hey, when you strip it all down and you know, keep it as simple, stupid as possible, I think that, real estate is a incredible vehicle that it can really drive you in a lot of different directions. But if you're not staying clear on, okay, hey, this is where I'm going and commit to it for a few years, you're going to find yourself in limbo and not really having much success because you've, kind of got the shiny penny syndrome.
yeah, no, for sure. And I think there's a lot of whether it's younger people age-wise or just
Hmm.
newer people who are really hell-bent on like jumping 2 feet into the deep end from a real estate
Yeah.
standpoint without experiencing the real estate business in some capacity,
Yeah.
whether it's as a broker, whether it's working as a property management company, whether it's working as an analyst at a
Hmm.
large, institutional real estate
Yeah.
shop. Like there are plenty of jobs within real estate. Like you can get a job in the real
Oh,
estate
yeah.
business. Like
Yes.
go do that for a year, whether
It's
you're
arbitrage essentially, right? Like you
yeah,
don't have any
exactly.
risk. It's just your time. And when you're
Yeah.
young and you're in your 20s, go broker, go be an analyst somewhere, right? But I think then having approach it with, okay, I'm going into this to get the information, not,
Yeah.
hey, this shop wants to pay me 75 and this shop wants to pay me 87. Like,
Hmm.
you know what I mean?
And this is what I tell a lot of like a lot of kids like coming out of college will like DM me on Instagram and they're like, I'm trying to like I want to, buy deals, I want to do this, I want to do that. And it's like
Go make money.
yeah,
Go learn.
go be a broker, go work at a PM company. Like that's usually the
Hmm.
first two things. And they're like, "Well, I have an opportunity to work as like an analyst at this massive institutional real estate firm." And I'm like, "Well, let's marry the next step with the end goal, which is probably not working as a 75K a year analyst for the housing tax credit fund that does 1,500 unit developments in Virginia and you live in Boston. Like there's no transferable skills that you
Correct.
acquire in that
Correct.
role. Like go work as like an acquisitions guy on like some kind of commission basis, maybe some
Yep.
small like monthly base
Hmm.
for like a local real estate guy, and
Yes.
then you're
Yes.
gonna learn all the shit that you got to learn to go do that
Correct.
yourself.
Correct.
And yeah, I mean, I think that's the easiest way to get over the fear of what you don't know in order to kind of pull the trigger
Well, it's
yourself.
all you're mitigating risk, right? Like
Yep.
if you go out and you're like, hey, I'm gonna go grab, 250 grand from my grandparents and 250 grand from, my buddy's dad, and you're gonna go buy this deal, and then, you get your teeth kicked in, not probably the best feeling, right? Versus
No,
if you go to a brokerage shop and yeah, maybe you're kind of, getting hosed a little bit on your splits, but you're the young guy at the bottom of the totem pole. Like
yep,
there's still no risk aside from your time. So, it's either like, hey, you have no money and a lot of time, or you have a lot of time and right, no
exactly.
money. It's just like inverse. So yeah, I think that's a big thing that I try to encourage guys to go and do.
All right, let's close out this episode with a good seller financing story, knowing that you do a whole bunch of
Okay.
seller finance deals. Do you have a good
Yeah.
one that comes to mind that would be fun to talk about?
Yeah. So this wasn't on a multifamily, it was on a storage deal, but we've talked
Okay.
about just the consistency and follow up and so on and so forth. But really, this had all kind of stemmed from I had bought, well, from direct mail. There's a gentleman that I bought a couple houses from. This has been like this is pre-COVID, 2020, like kind of my first few single families. And nice guy, kind of a squirrely guy, like had, bought a lot of properties from tax sale, just a like a true, just like kind of a gritty guy, like was just mover shaker, not a ton of sophistication, but good, like good person. I'd go out and do deals. I still talk to that guy today.
Mhm.
This all stemmed from that relationship. He had mentioned something. We'd stayed in contact over the years as I've been buying more homes, and he had mentioned to me, he said, "Hey, I've got this friend of mine. I know you've recently started buying some storage. He's got one, kind of close to our town. Like, would you have any interest?" Yeah, and this went on for my attempt to reach this gentleman went on for probably 3 years, 2.5, 3 years. Like it was, again, towing the line of how do you follow up without being annoying. And I call the guy every other couple months, texts, had sent a few pieces of like actual handwritten notes, had sent the guy a mail. My like kind of famous thing is like I'll go send somebody a full mailbox. We might have talked about this on the
We
on the
we
last
talked about this on
episode,
the last one,
right?
so blows your mind. Go listen to the last episode. Yeah.
Yeah. So, I'd sent him a mailbox, still nothing. So I just started sending him other objects. I think what finally got him
Objects
was
is a
a was a Rubik's cube, right? Again, this isn't the most creative thing, but I put in the mailbox with a little, hey man, like let's figure this out. Just give me a call. And he, again, it was like 2.5, 3 years later, he finally calls me and said, I owe you an apology. He's like, I have seen your calls, I've seen your texts, I've seen the objects that you've been sending me. And I'll be honest, like work a 9 to 5, I'm busy. And he's like, my friend tells me that you guys have done some deals together. You're a great young guy. And he's like, I want to sell it to you. He's like, let's get together. And I don't think I was living in Indiana at the time. I jumped on a flight, ended up meeting the seller of the property. He gives me this whole site map, like a legitimate, like a cork board of the units. And he's like, hey, look, like I've owned this thing for years. It's free and clear. I don't answer the phone when people call me because I don't want to be bothered. It's like people are dropping checks and cash. And this is the nicest guy, like somebody, you go have a beer with.
Yeah.
And he said, can you get to this price? And I said, yeah, I want to hold the note because I don't want to pay the capital gains. And I said, okay, like, what are your thoughts on this? And so presented him with an offer, and we ended up, it was a $500,000 purchase. We ended up putting 100 grand down. I think it was, I want to say 2% interest on a 25-year AM with a 5-year balloon. So very, very solid
Yeah.
structure, but it was just follow up, follow up, follow up, follow up. Again, not being overly annoying, not holding a gun to the guy's head saying, why don't you want to sell to me? Right. But just being like a halfway decent person and getting a little creative with how do you get that person to call you back? Right. Instead of just hammering them with text, hammering with cold calls. It's like, you know what? I'll put this, freaking Rubik's Cube in the mail or a mailbox. And I just approach it with like, hey, I'll just follow up with this guy forever.
Yeah,
Right.
but that's the mentality that you have to
Mhm.
have is this is a deal that where it's the seller is the avatar that is typically the avatar who's going to sell. It's a deal itself from a, dirt and real estate standpoint that's
Mhm.
geographically located where it has to be in order for you to pursue it.
Yep.
There's no downside in just pursuing that legitimately forever until the guy sells
Yes.
it to somebody else. Like that should
Yes.
be the mentality for the
But what
stuff
helped,
that's
and this may be something I know that you could probably relate to, is a way that I was able to stay in touch with that gentleman was, hey, like his property is basically in the middle of two of our other ones.
yeah.
Hey, picked up this one. on the north side of you. Hey, picked up this one on the south side of you. So it just lets them know, even if you're not communicating with them, like, oh, okay, this guy's like not completely full of it, and he's actually going out there and performing. And so when you're able to finally, when they make that decision of, hey, I do want to sell this, you're top of mind, but you're not like that spammy, annoying. Like this is no shit. The only storage facility we've sold, that guy continually blew me up after the sale. This is a young guy. He may listen to this. I have no idea. I had to block his number. I'm like, guy,
Yeah.
if like, you know what I'm saying? So
And
it's
if you own real estate, I mean, you're being probably reached out to by those types of brokers or whatever. And
for
like,
sure, for
you know,
sure. And I respect the hustle. I really
I
do.
do, I do.
But there comes a time and a place where it's, hey man, so you texted me 2 weeks ago, and I was like, hey, like we're in acquisition mode, and you call me 2 or 3 times in a day. This is not going to work.
Yeah, exactly.
Right.
We've got one broker in one of our markets. Again, maybe he's listening to this, but you know what? You know, who cares? Last drop of the Sun Cruiser here. We'll maybe give him a piece of advice. It's you can't call the same seller as you mentioned. Like this is like a monthly call, and it's always like let's figure out how we get this thing on the market. And it's like, no, that's not. There isn't. Yes, sure, there's a price for everyone, but if you're in the game and you're an active buyer and seller of real estate in a market and you have been for a long period of time, like the number that is going to move it for you and
Sure.
that the market's not there. So there's
Correct.
nothing else we can really
Correct.
discuss. And there's no like amount of proposals and BOVs and shit that's going to get you over the hump.
Right. Further
It's just yeah, and you're not
further
leading with value or anything else.
on that topic is, oh, hey, I can bring you, said buyer X price. There's a difference between said buyer and said performer,
Yes, exactly.
right? A lot of these, groups that they are quote unquote well capitalized or they have all this capital behind them haven't performed on a deal, let alone one like I'm not the smartest guy in the world, but like most people have a calculator.
Yeah, yeah.
So it's like, I get that you want to get the listing and you want to like totally understand that, but that's just not where we're at this point in time.
Yeah. And the thing with multifamily is, that might be a little bit different than like a vacant single family home or maybe storage, right? Where you're
For
not bugging
sure.
people
For
to
sure.
show a property. But the thing with multifamily, as you know, because you've bought a whole bunch of multifamily buildings, is like actually getting a seller to commit to the sales process is challenging because everyone gets spooked. You know, everyone living there
Correct.
gets really nervous when the
Hmm.
insurance guy is walking the units and is taking
Correct.
pictures of everything. It's like,
And if you don't perform on that transaction, again,
yeah,
due diligence, all that kind of stuff aside, and it is a true mom and pop seller who is, you know, buddies with the folks in 10 and unit number 7, and they
yeah,
live there for 25 years, and you don't perform on that, right? It makes you look bad. Not only that, but it also puts the seller in a bad position because they're dragging all these people through all these insurance guys, and it's just like that's why most of these sellers want a discreet sale, want somebody that can perform.
yeah,
Hence why sometimes there is a heightened level of motivation, and you're able to get it at a lower basis. That's just
exactly.
how it works.
And call
So
it out in the marketing to those folks. We will only bug your folks one time and we will
yeah,
be
we
whoever you
don't.
need us
This
to be.
doesn't need to be. Hey, we're buying that freaking place. Do you like living here? Like that's not how it goes.
No, exactly.
So,
All right, man. This has been great.
dude, appreciate you.
I think it was fun. I think we touched on a whole bunch of good topics. So I'm sure everybody listening is gonna have actually learned something, which
Well,
I mean
that's a
that was the goal
plus.
going in. I think everybody wanted to learn something when they clicked on this episode, and I think they did, and I think they were entertained. So that's good.
We'll take it. I'm glad they're learning something here, and maybe didn't lose brain cells like they do watching my Instagram.
Exactly. But let's get them over to your Instagram. So plug the
Okay.
Instagram. Let everybody
Yeah,
know how
just
they can get in touch with you and reach out to you.
yeah, it's Zach ZACH dot Hereth HOERETH, and I'm pretty active on there. I'll respond to DMs and all that. Try to keep it, real and raw, and share some wins and share some kicks to the teeth as well.
It's entertaining stuff, man. So I admire your newfound fame. It's well deserved.
Oh, I appreciate
But
that.
everybody listening, yeah, go check out Zach, give him a follow. It's fun content for like the real estate folks who are like, there's not enough content out there for the people who are just like kind of in the trenches dealing with all the shit. You know what I mean? And it's like
Sure.
it's fun to talk about that stuff outside of just pretending that it goes well all the time.
Doesn't happen.
Exactly, unfortunately. But awesome. I appreciate the time. Before we
Absolutely.
get
Thank
this up.
you.